Remember Yes Bank? The bank that hit a few bumps in the road a few years back? Well, they're back in the news, and this time it's an interesting story with a few twists. In the news due to a report by the Mint that Reserve Bank of India has given preliminary approval for the sale of up to 51% stake in the bank. If this acquisition goes through, valued at $10 billion, it would mark the largest acquisition in India's banking history. On the back of the news of this acquisition, share price of Yes Bank has gone up. Now, is this news true? Before we delve into that, let's quickly understand the history and shareholding pattern of Yes Bank. Yes Bank was established in 2004 by co-founders Ashok Kapoor and Rana Kapoor. Initially, the bank experienced rapid growth under Rana Kapoor's leadership, expanding its corporate lending aggressively. We all know how, by 2020, Yes Bank faced severe financial difficulties due to its high exposure to bad loans and governance issues. The RBI intervened in March 2020, leading to a reconstruction scheme where the State Bank of India and other financial institutions took significant stakes in Yes Bank. Under this scheme, SBI acquired a 49% stake in the restructured capital of Yes Bank with a 3-year lock-in period for its holdings. The latest holdings as of May 2024 is that of SBI with 24% stake, followed by Verventa with 9.21%, LIC, HDFC, ICICI, Axis Bank, etc. Now, coming back to the recent news. News reports have suggested that Reserve Bank of India has approved the sale of up to 51% stake of Yes Bank, paving the way for new ownership of the private lender. And the Reserve Bank of India's decision to approve its majority stake sale, especially up to 51%, is indeed a rare and significant move. Typically, the RBI has stringent regulations regarding promoter holdings in banks to ensure a diversified ownership structure and prevent excessive concentration of power. The standard cap on promoter holding in private sector banks is generally set at 26%, which is in place to maintain checks and balances within the banking system. Now, coming to this story, Yes Bank has publicly denied these claims, calling the reports factually incorrect and emphasizing that no such approval has been received. Now, we want to highlight one more thing here. The statement aligns with the recent regulations from the SEBI regarding the handling of market rumors. Companies must keep an eagle eye on mainstream media for news about major corporate moves. Now, if a rumor impacts the stock price, the company has just 24 hours to confirm or deny it. Yes Bank's prompt denial of the report about RBI's approval reflects compliance with these news regulations. Now that we have cleared out the news for you, let's look at how Yes Bank's financials are looking. Despite the controversies surrounding the stake sale, Yes Bank's financial health has improved since its crisis in 2020. Now, by the end of financial year 24, the percentage of bad loans had dropped to 1.7% thanks to transferring its non-performing assets to an asset reconstruction company. The bank's liquidity coverage ratio, which means its ability to meet short-term repayments, was very low at 37% in March 2020 compared to a healthy LCR of at least 100%. Now, the bank's liquidity is now stronger with an LCR of 116.1% and deposits have grown to rupees 2.66 trillion. Moreover, Yes Bank reported a net profit of rupees 1,251 crores and an operating profit of 3,386 crores for financial year 2024. CASA ratio is significant for banks as it reflects the proportion of current and savings accounts relative to total deposits. A higher CASA ratio generally indicates lower funding costs to the bank, contributing positively to its profitability. Examining the CASA ratio, we see an improvement in the financial year 24, now standing at 30.9%. Overall, it looks like Yes Bank is looking for a turnaround even as it navigates the complexities of ownership and regulatory oversight. Going forward, all eyes will be on Yes Bank's Q1 earnings, which is set to be released on July 28, 2024. We'll keep an eye on the news and see you there. Having said that, this is Aditi Priya signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.